Anna in Toronto wants to talk about the uranium. Go ahead.
Hi, good evening, gentlemen. My question is on Cameco. Is it now a buy at these levels, sell or hold? Thank you, and I'll hang up.
Okay. So, Anna, I want to start on this one just to address something I noticed. How many calls tonight are coming in on resource stocks? And I think that it's important to consider this, that people have a tendency to look back at what's worked over the last number of years, and when they look to put on new positions, look back at what's been working, and if they're trading at low prices, hope that they'll get swung around and get going again. In basic materials and resources, it comes down to supply and demand. And if demand has backed off a little bit and it starts to come on, it doesn't necessarily mean prices are going higher if the market has been able to catch up in the ability to supply. And I think that there are a ton of investors in Canada who have come to be used to invest in resource stocks and don't recognize the fact that there's been like $200 billion worth of projects come on stream with new production in various metals and basic materials. And just because China starts to speed up does not mean we're going to get back to the pinch point we had, a couple of years ago. It's much like what happened in technology stocks after 2000. Demand came back, but the ability to supply was there and the pricing power didn't exist. So I think you have to look forward and say, where is there a pinch point today? And I think the pinch point is in energy infrastructure or the ability to pay a dividend. So I would say at this point, we don't think that you really should be focused on any of the basic materials markets, companies in the market. If you think there's risk in oil prices and gas prices, certainly uranium pricing, uranium is not that attractive as an alternative in this market.
All right, interesting. Here's Joe. He's in Mississauga. Go ahead, Joe.
Great show, guys.
Thanks.
Your opinion on Verizon for the long term, and if you could comment on the relationship with Vodafone, who I believe owns a big chunk of the company.
Right, and they just got a big dividend, or at least Verizon Wireless just handed out a big dividend. Dividend payers like these ones getting hit hard in the U.S. lately. How long does this last?
I think that this is going to create an opportunity for the dividend payers because if you look at them on a longer-term basis, this has been more like a pullback in a long bull market if you took a weekly chart. The telecom stocks in general I think look very, very good. Verizon is one that I tend to like. So whether you played it with an ETF like VOX or whether you looked at Verizon as an individual equity, this is a pullback in an ongoing bull market. And if you take the whole yield camp as a theme, there have been pullbacks along the way but have continued on while many other sectors haven't. So I'd be comfortable buying Verizon. I think that the potential change in tax laws and the tax on dividends is creating a little pullback in some of the dividend payers that will offer you an opportunity to be a buyer.
Okay, we have a market call minute coming up, and we'll squeeze in a call here from Carol. If you could keep it brief, Carol, that'd be great, and David will keep his answer short as well. Dundee REIT. Go ahead, Carol.
Yes, David, I've been wondering about Dundee REIT as opposed to Granite REIT. I'm an old lady and I'm looking for income, and I'm not too sure which one I should buy, and if you would buy either one now.
Okay. So recognizing there could be some near-term volatility in this market, I keep giving that disclosure, I think that you could own either. I would prefer the Granite REIT because I think you're going to get better dividend growth going forward. The one risk in Granite REIT is their largest tenant, the tenant, is Magna globally. Now Magna's doing really well, and they're executing well in their business, and I think they've got a great covenant. So I would prefer Granite REIT because I think I'll get better dividend growth from it, and I think ultimately that's the biggest driver of valuation in this market.
All right, very good, David. Right now we'll look at the market call minute. Marcel called in from Brampton on potash.
November and October, not generally the time to buy agricultural chemicals companies. Potash hitting a new low for the year, I would steer clear.
Rob in Peterborough on Research in Motion, up again today.
Okay, so if there is going to be a time to buy RIM, and if there is going to be an opportunity, it will be into the launch of Blackberry 10, which I would compare to a launch of a new mine for a mining company, the run-up that will come into that. Whether or not they'll be successful is a really big question. They got a very tough challenge. It's not for my liking, but I can understand how a value investor might take a crack at this.
Wayne's in Paradise Hill, Saskatchewan. Barrick Gold.
Barrick Gold, one of the weakest performing stocks in the gold group, really has led the group lower. Avoid it.
Margaret in Ottawa. Constellation Software. Jason Donville loves this one. CSU.
You know, this is a really interesting company. If you like to buy predictable cash flow, Constellation Software is a company for you. They've got lots of different types of mature software which they've put together and are getting revenue from licenses. Stock's performing really well, fairly tightly held. I think it's a good hold.
Have you ever held this?
Yes, we have. And we actually own it currently.
Oh, you do? Okay. Frank's in Montreal. Alcoa, I think I can guess your answer here.
Yeah, sell it. Sell it. Broke the lows today. This is a group you want to be very careful of, and it's one of the weakest in the group.
Larry in Hawarden, Saskatchewan, on Peyto Exploration. We interviewed the CEO just yesterday.
Right. So we own Peyto, liquid-rich gas. We like it. We think they're a low-cost producer with lots of opportunity going forward. This is one of the few energy producers we own.
Alan in Vancouver on a much bigger player, CNQ.
CNQ, we don't own any of the big integrated companies right now. Pricing, I think, is going to be a little bit tough. So in the short run, we're avoiding them.
And last one, Tony in Toronto, SNC Lavalin. Are you seeing value here?
Again, not a bottom fisher. We'll steer clear of this for now.
All right, fair enough. Nicely done. David covered a lot of ground, and there's more ground to cover with his top picks right after this break.